Recently, markets have been signalling that the much vaunted soft landing is hoving into view. Manufacturing in the West has been contracting, but this has been offset by strength in the service sector. Labour markets remain tight, inflation is subsiding. But we feel caution is warranted. The slowdown that we have seen in China in recent months appears to be reflective of a more muted global economic environment. Core inflation in the West has proved stubborn, particularly, for example, in the UK, where policymakers are less willing to signal a peak in rates. There is also a risk of headline inflation spiking again from higher oil prices, food prices, or other commodity price shocks. Ultimately, a lot has to go right to achieve the soft landing. More likely, we end up with a bumpy one. We may end up escaping a recession while inflation continues to run hot, or we may see a broader slowdown as inflation cools, but it is not clear which of these outcomes is more likely. Given the uncertainty and the potential for unfavourable scenarios to unfold, we think a degree of defensive positioning is warranted. By investing in companies with a proven track record of generating high returns on capital over time, we think these businesses will perform relatively well in tougher economic environments. Such companies, we believe, are likely to outperform their peers and potentially be the beneficiaries of industry consolidation.